just now, and it's always a pleasure to have him on ET Now. Ed, good morning. Thank you for joining us. On any ordinary time frame, if you look at Dow and the fact that it has registered a decline, which is the losing streak, it goes back 30 years and markets are not panicking. Would you read too much into this decline which the Dow has registered?
I wouldn't. It seems as though that great big sucking sound is all this money going into Tesla. I mean, Tesla just kind of keeps going up and up. And it's also going into technology. It's been going into some semiconductors. NVIDIA looks a little toppy here, but no, I don't think it's anything to panic about. I think it would be great to have a bit of a pause here, not just in terms of Fed rate cuts, but also in terms of the market. We need a little bit of time here for earnings to catch up to valuation multiples. And so I'm not particularly disturbed by what's going on in the Dow. If that's signaling a weakness, a correction in January, which I think is coming, a lot of people have huge gains in their portfolios and they may want to rebalance. They may not want to own so much NVIDIA or so much Tesla, and they may want to actually sell in the new year after a new tax year starts. So all in all, no, I think the market's fine.
So the market is fine, but what about the other point that Nikunj was talking about, that in the last 15 days, it's perhaps the most crowded trade, which gets more crowded, and the crowded trade for the last couple of months has been that dollar strength and the kind of moves that we have seen there. Right. Do you anticipate further strength there?
Well, the markets have discounted a lot here, and with Trump 2.0 probably already starting. I mean, the president-elect isn't president yet, but he's certainly acting like he's president, and the financial markets are certainly greeting him as though he's president. So I think we've seen a strong dollar, we've seen a strong stock market because the perception is that we're going to have a very pro-business approach to running the U.S. economy, which, by the way, has done remarkably well over the past 4 years under the Biden administration, which has kind of radically different, more regulatory policies. So all in all, I think there is a recognition that the U.S. is in pretty good shape and compares pretty well to the rest of the world. I mean, we got France, Germany, Canada. We got governments kind of get awfully wobbly in a lot of parts of the world. And there was a lot of concern that we might have a lot of partisanship coming out of this election. But actually, Trump won a clean sweep.
But he's definitely acting like the president already. Let's see what happens after January 20th when he actually does, kind of come to the table. But who's going to come to the table today is the Fed, right? And the FOMC. The 25 basis point is pretty much factored in yet, Ed. But what's the expectation for 2025 now in terms of whether it's going to be a shallower rate cut cycle?
Well, you should ask me tomorrow, because I think we're all going to get sort of an update on where the Fed's head is at. The Fed has clearly signaled that they would like to move ahead with a 25 basis point cut. But I think there's going to be a big debate at that meeting. I think there's going to be quite a few dissenters who are going to say, we don't really need to cut rates anymore. And so if they do agree to a 25 basis point cut, it'll be because Jerome Powell has promised them that at his press conference tomorrow, he's going to make it very clear that this is may very well be the last cut for a while, that there's going to be a long pause. I always thought that the market was expecting too many rate cuts. We don't have a recession. We don't have any reason for the Fed to really lower rates dramatically, and quite the opposite. We got a resilient economy, which confirms that interest rates are where they should be.
All right. Ed, really appreciate your time. Glad you could join us, and wishing you best wishes. Here's best wishes for 2025.
All the best. Thank you.
60 points lower for...
If you like this video, then like, share and subscribe to ET Now.